What's up, guys? Welcome back to another video. Thanks for tuning in to Stock Essentials. Today we're going to be going over Metromile stock, which has been hit pretty hard by earnings, and still is continuing to fall, as we can see negative 7% on the day, down at all-time lows of a price point of around $4.22. So this is going to be a really nice dip in my opinion, and we're going to be going over why. But before we get started, take a look at the link in the description for our Patreon. We have buy and sell option alerts. Here's an example of alert. We bought to open a Tesla call at $11.29 per contract. And then we sold the contracts at $13.35. So a nice $200 gain per contract on Tesla calls. Let's get back into the video. Metromile stock has been hit pretty hard. It was at all-time highs early February of just about $20 per share. As you can see, it's sitting negative 75% from the all-time highs, sitting at $4. So it's right around, and now it's pretty much a penny stock. And that's because their guidance, a lot of people aren't really driving that much. They don't expect as many people signing up because a lot of people are trying to get back to normalcy. But I do think that Metromile stock is pretty oversold. As we can see, the RSI is sitting at around 18. So very, very oversold stock, and I do think it's due for a rebound. As we can see, it is at the very tail bottom of moving average, as well as the lower end of the Bollinger Band. So very, very oversold stock, and it's been hit pretty hard by earnings. And I do think this stock has the capability of tripling over the next couple of months, possibly in a few years down the road. So this is going to be a nice little buy and hold long-term stock, and a lot of people are analyzing the stock. As you can see, it's incredibly oversold and has a 3 times potential from here in the upcoming years. This company, Metromile, is a disruptor in the auto insurance industry because it's pay per mile car insurance. It's designed to save a lot of people a lot of money and actually pay for the miles that you're actually driving. So during COVID, they're obviously not going to have that much revenue because not many people are driving, but they are going to have a lot of users, a lot of customers signing up for their platform to take advantage of the very, very low insurance premiums. But of course, I do think that it's going to grow because a lot of users, they're going to have a really solid user base, and once normalcy returns, a lot of people are going to be driving a little more, and they're going to be paying more for auto insurance. And it's still going to be cheaper than your typical car insurance where you're paying the same flat monthly premiums, but it's not going to be as low as it was during COVID when everyone's doing remote work and staying indoors. So that is why we're expecting some really nice growth over the next couple of months, possibly years, however long we have to hold this stock in order for it to grow. So if we go to Metromile, sitting at a really, really cheap price, I'm planning on buying, probably increasing my position to around 1,000 shares, currently holding around 300 shares, down quite a bit, but I'm not too worried. I do think that this is going to be a really solid growth stock in the upcoming years. I'm going to be holding this for quite a while. If you want to play options, not too much is going on with the options chain. They don't have much expiration dates or strike prices as well. The longest call option you can buy would be the March 18th, 2022 call option. And even then, there's not many strikes, not too much volume going on with these strikes. But you can do something like a $5 call option expiring March 18th, 2022, and it's going to cost you only $80 per contract. So that's going to be a lot cheaper than just outright buying 100 shares. Even though this stock is pretty cheap, 100 shares only can cost you $400. You could buy one call option instead for just under 100, and you'll leverage 100 shares that way. So options, not really looking too good. For the same price of 100 shares, you could buy 5 of these $5 call options expiring um, March 18th, 2022, which is about half a year, a little over half a year, 6 months, 7 months from now. So you have a lot of time on your hands, but nothing really major, nothing too exciting for these options chains right here. But there is some one strategy that I may consider doing. It's going to be the $5 strike expiring September 17th. So this is going to be a quite a long-term cash secured put. It expires next month, and you will collect 908 or $98 of premium per cash secured put that you sell, and you have to put down a collateral of only $500, perfect for small accounts, as we discussed earlier. So really good return on your capital, and it's going to give you the opportunity to possibly purchase Metromile stock at an even lower price. As you can see, our break even is going to be around $4 flat. So that's going to be our new cost basis if Metromile stock goes below our strike price of $5 at expiration, which is a month from now. So it's going to be a really nice dip to buy, even though our strike price is at a $5 strike. If we do get assigned on our cash secured put, we're going to be owning Metromile stock at a price point of just $4 per share, which is a very good price point to get into the stock, especially with how cheap it is right now. So next month, I do think that it will be above $5 per share, but this is a really nice and kind of safe way to play options if you want to play options on Metromile stock. Because the premiums are kind of low, call options can be a good strategy, but in the short term, we don't know when it's going to rebound. So either buying outright shares, because the stock is pretty cheap at $4 per share, or just selling a cash secured put at $5 strike a month out would be a good strategy as well. That's about it for this video. If it helped in any way, please leave a like, comment down below what your thoughts are on Metromile stock, and of course subscribe if you're new to the channel. It helps out a lot. Thanks for watching.